Well, with that, let's welcome in our market master of the day, Taher Badshah, CIO of Invesco Mutual Fund, is joining in. Taher, thanks so much for being with us. Season's greetings to you. Let me start by wishing you, very, very happy new year, the one that's about to come. Now, as far as 25 is concerned, I guess it was not entirely happy for equity investors. If people were diversified, had a fair amount of gold and silver in their portfolios, they're laughing all the way to the bank. But the equity underperformance really hurt. So let's start right there, Taher. Realistically speaking, are you expecting the mid-cap and small-cap underperformance to reverse in 2026? If yes, why and by when? Taher, I think you're on mute.
Sorry about that, Subi. Well, let me just start off by saying, wishing you all a very happy new year as well. To your question, so I think mid caps at least have done reasonably well in the course of the year, and funds in many cases have actually outperformed the index as well. So at least the mid cap index has been able to return a positive outcome for calendar year 25 at about 6 odd percent. The real drag has basically been in the small cap space, and I think it is essentially to do with the fact that we've not really had a strong, micro or other growth outcome from at least from the point of view of corporate earnings in calendar year 25. And there's a reasonably decent chance, though back-ended, that earnings will probably kind of become a little more stronger during the course of 2026 compared to 25. I think it will, if that were to probably materialize, then there is a fair chance that small caps at least, which have meaningfully underperformed, the index itself is down about 6 odd percent for the year as a whole, can probably do better. It will have to be a reasonably slow and gradual process. So I think it'll be more back-ended. Small caps do have a chance to come back, and especially if you have a broad-based economic recovery, that is what essentially drives small caps. So I would be relatively more hopeful of a small cap recovery coming about and more starting second half of 2026.
But do you expect a broad-based recovery to come through for the small cap index as well? Because at the headline level, everyone's expecting that we get back to say a 12-15% kind of an earnings growth. But will that be driven by particular stock sectors? Because just getting back to that point about the small cap underperformance, you need to see a broad-based NSE 500 kind of an earnings recovery.
Yeah, I think that probably is not entirely visible at this stage, at least when we evaluate earnings and if we look at all kinds of estimates on the street as well. When we build it up bottom up, at least as far as the nifty is concerned, then it will probably end up at about 13 to 15 odd percent. Estimates even go up to as high as 16-17% for FY27. But I would probably think that it is relatively easier to think about the narrower space or the narrower market at this stage. The broader market probably we will require quite a number of other things, more from a domestic standpoint as well as global standpoint, to fall into place. Tariffs as well as for the domestic figures to start becoming a little more, a deeper or rather deepen into the system for a more broader based economic recovery to take place. So that is why, as I say, that it's going to be somewhat slow, somewhat more back ended. But given the fact that I've always noticed that small caps generally, when you buy them during pessimism, during times when they've not done well, during years when they've not performed, I think that generally tends to be a good starting point, and especially if you take a 2 or 3 year view out view, you usually tend to do reasonably well.
So, Taher, on mid caps and small caps, I guess it's become a lot more selective. And I think the right fund managers with the right skill sets, I think they are the ones getting rewarded. Otherwise, just on a broader basis, while you spoke about this recovery, is it going to be very, very selective? Or can you at least play individual themes? Or will there be a lot of divergence within a sector, a small cap sector? I mean, for instance, I'll just give an example. Look at EMS, right? It was the sector that the whole market loved. Then it came under severe firing, lots of pressure. So do you expect a revival over there? I mean, similarly, renewables, so many other, micro sectors in the small cap arena. Can you name one or two that you think overall should do well in 26?
Well, I think, some of these things will depend upon how, even public investing actually, or public spending actually happens from the government side over a period of time. I think some of these themes which have been very, very strong over the last 2 years will probably go through still a little bit of pressure, I guess, over the near future. I think markets will probably rotate a little bit more into somewhat more defensive themes, which are probably driven more by consumption. I think that is where you will probably see a little more action, and that too in areas which have probably seen underperformance. Maybe value retail to some extent will probably do well. I also feel that it might be a decent time for some of the high-end retail also to make a comeback. That is where you are able to uh, expect that spending power will probably once again resume thanks to all the measures which have been undertaken by the RBI as well as the government. So I think some of these things are probably more likelier to play out um, as the market gains momentum. I think some of the themes which have played very well in the recent past, especially things like in the manufacturing area, etc., will probably take a little longer. I think defense still has a decent chance because even if overall, government allocations are a little muted, I think this will be one sector which will probably still merit a lot more attention from the government as well, given where geopolitics is. So I would think that this is then another theme which probably still, especially after this correction, can still have a decent chance to kind of come back. But I would be a little more skeptical about some of the others to come back very soon. I think hospitality and travel is something which can still do. Again, born out of it being relatively more non-discretionary in nature. And that is another area where we probably are still more positively inclined and reasonably well positioned.
So hospitality and travel, defense.
Consumption, parts of consumption is another area which should do well.
Okay.
And some of the industrials will probably be a little more back-ended. They will come back, but I also do not expect valuations in some of these which are to go back to their erstwhile peaks. I think it will probably now be returns which will be more in line with the earnings CAGR that they're able to probably generate.
Taher, what is your own personal view on gold and silver? Is this a good time to buy an ETF linked to precious metals?
We are keeping our enthusiasm alive as far as gold and silver is concerned, and that is well reflected in our multi-asset allocation strategy, where we still continue to hold more like a 80% allocation, both gold and silver combined. I think at least my expectation is not of the kind of returns which have come about in the last year, but I'm equally surprised to see the kind of momentum that both of these still continue to maintain. At an aggregate level, what I can say is that we are keeping to this allocation that we have, and that should, in a way, give you an indication as to how bullish or bearish we are. But we keep rotating between the two asset classes as and when we find an opportunity, and rebalance within that 80% exposure that we have between gold and silver.
Any themes you're less bullish on compared to, say, 6 months ago because stocks have run up or earnings growth is likely to slow down?
So like as I said, I mean, manufacturing will probably take a little bit of while to recover because market is getting now retuned or readjusted to the possibility of, large capex coming through and probably, questions around execution as well and execution related challenges as well for some of these companies. And reassessment of the addressable market for some of these players. So I think that, like I said, will probably take a little more time to come through. And even if it were to, probably I'm not very sure if valuations will go to those extremes that we saw in the course of 24-25. I would like to think that, even some of the consumer tech related entities will probably be a little more sober in the year to come compared to what they have been in the past. So there will be that regular rotation which comes about after a very strong performance of a couple of years. So there should be a fair bit of that coming through in 2026.
I was looking at some of those consumer tech names now, Taher, as you speak. Swiggy is actually having a good morning. Let's pull up some of these stocks. Swiggy is up 3.5%. It's suddenly seeing a surge. It has company in the form of Zomato as well. So Eternal is up about 1%. That's an interesting move on both of the food tech, food delivery, consumer tech companies that we're talking about. The other space is really metals. Anything and everything in metals even remotely connected to metals is going higher. Look at SAIL. SAIL is now surging 5%. Hindustan Copper has cooled off. It started with a 10% surge. Now it's about a 5% up move on Hindustan Copper, 6% actually on Hindustan Copper. Graphite India and HEG, they are up and about. I was speaking about MMTC earlier, the PSU giant, which is a play on some of the precious metals. There's also Mishra Dhatu, by the way, Mishra Dhatu Midhani, up about 5-6%. So like I said, anything and everything that has, any remote connection to metals, precious metals, base metals, doesn't matter. All of them up and about. That's a green looking metal screen. So, Taher, to expand that point on gold and silver, and I guess people have really opted for the multi-asset funds, right? And they're still piling on the ETFs. A lot of FOMO that's also playing out. But beyond the precious metal space, we've seen a rally in a lot of base metals as well. So, are you positively inclined on metals as an overall view, or is this just a trading move that you have to maybe play on the upside?
So we've not really been able to justify, at least some of the spaces in the metal space aside of precious metals based on fundamentals. To that extent, our exposures out there are relatively low. But I would like to think that there is more of the dollar weakness, which is right now playing through in many of these names, and the fact that the precious metal side has rallied a fair bit. So there is a certain amount of catch up which is happening on the other side. We have yet to kind of be able to assign a lot of fundamental value to some of these names in the metal space, and therefore our presence out there is relatively limited.
Okay. So, Taher, to sum it up, what's your big call for 2026 and the big advice to investors?
So, look, I think it is, to my mind, I think it is still going to be a year where rotation between asset classes is going to be reasonably heavy. We've been seeing that over 2025 and a little prior to that as well. I think much of that trend continues. So we'll have to be agile. I think, therefore, to that extent, find extremes in certain areas, certain sectors, certain fund structures, certain market cap segments. So like as I said, small cap at one level probably could do well, especially if you take a somewhat longer view. You could probably play for the recovery of earnings through the large and mid cap space in the course of 2026. I think you will probably get a chance to rotate out of, let's say, foreign equities to domestic equities, maybe even at some level, if you continue to see strong rally in gold and silver, maybe rotate a little bit out of that as well, and try and increase positions in domestic equities over a period of time. So some of that rebalancing is what I probably expect is going to dominate most of 2026.
Okay, all right. Interesting view. Thank you for that, Taher. And we hope to, of course, connect with you again in the new year. Season's greetings and wish you, your teams, and all at home a fabulous 2026. Thank you for joining.
Thank you.